Hi, I'm Joel Gilgard with Gilgard Analytics. Thank you for tuning in to this tutorial. This is part 3 of 2022 asset classes and economic indicators. Just walking through the file that is posted to Gilgard Analytics website. And so, the data here is made available for you, the viewer, to just give you a high-level overview of various asset classes and economic indicators, what they've done historically and what they look like vis-a-vis today. Just to give you, it's not a perfect indicator by any means, but it can give you more confidence if you want to buy or if you want to sell an asset class. And so this is the last part of this series, and where we left off was at the Gilgard Equity Index. And so this is a compilation of approximately 26 stock markets around the world. It's an equally weighted average, and all of the prices are weighted against its 34-year average. They're summed up, divided by 26, and so the average is always going to be 1. And that's the same thing with the majority of the Gilgard indexes. And the stock market has the high of 1.38. It was as low as 0.45 or 0.55. So basically, the ideal is you buy at 0.78. So this one, the world, and so you have to keep in mind, this is year-end numbers. So it's very likely that during 2011 was an opportunity to buy. It was certainly 2008. We also had it in 2002. etc. You had some other years here in the 90s. So the idea is buy low, sell high. So this one moves fairly slowly. This is to just give you an understanding how exuberant the world currently is or was. And so today, the end of 2022, I would say it was moderately exuberant. Next is the Gilgard Metals Index. So this is an average, equally weighted average of 5 industrial metals. Again, also to give you an understanding where it's at. So this one jumps around quite a bit. Just like the Gilgard Equity Index, it's the prices are higher than its generational average, but not exuberantly so. And that's the same thing with the Gilgard Agricultural Index. It comprises of 8 soft commodities. And so, prices have come from very low situations to so they've gone up. I wouldn't say that they're exuberant, but they're above average. And the yield curve ratio, and this again is it's the same as the U.S. Federal yields, and this is just to give the U.S. viewer a glimpse into what the rest of the world is doing. And so I would say anytime this is below 1, you're having slowdown. Anytime it's negative, you are experiencing some pretty interesting times. And so anytime this number is above 4, means that the world or one country is going through some severe economic difficulties. This is beyond an economic downturn. So here, for example, you had Japan. Some big trouble. But this fluctuates. Anything below, anything below 1 means that you're in a recession. Here, you're being goosed. But once it goes above 4, that means that the economies around the world are not doing that well. Same thing with the Gilgard yield curve spread. This is a composite of 14 different bond markets. So it's over the past couple of years, it has been negative. I'm sorry, it has been below 1, so it's been contracting. The average is 1.12. And here we have the Gilgard short-term yield is at 2.77. And so always, just make sure you're not losing your mind. This is the world, right? This is not just the US. And so you can see that, although yield went up very strongly, it still hasn't, as it's done here in the US, become negative, which might be the case at the end of this year. So long-term yields, and so basically what you can see here too is that short-term yields, they're still below the generational average, as is the long-term yield. The Gilgard Currency Index, currently, and this is basically what is the US dollar doing vis-a-vis the world. So the lower this number is, the stronger it is. The higher this number, the weaker it is. So the currencies have done fantastically well against the dollar since 1980. Now this number is also skewed by the Indonesian rupee. So this is just to give you, it's more accurate if you just compare it from year to year. Is the dollar going up? Is the dollar going down vis-a-vis other currencies? Gilgard Unemployment Index, again, this looks at the world, approximately 40 or so countries, and currently the world's unemployment is relatively low. It is actually below average -1 standard deviation. And this is basically the mandate of reserve banks around the world, is they want to keep labor cheap for the lords, so they will increase interest rates until unemployment goes up. Regardless of what they say, that is what they do. Haven't had much news on U.S. population. From what I can tell, it's stagnated. I haven't seen that before. This was, I think, during the Depression, the last time we saw that. This is U.S. GDP. Analyzing it is kind of meaningless. It's just a number, gross domestic product. Now, if you look at it, comparing it to per capita, it has a meaning. So right now, we're experiencing some pretty good times. New home sales last year, they fell. We had a period here. See, we had 1, 2, 3 years where they were above average, but they've fallen again. I have a feeling they will fall further. So, since, let's see here, 2008, they have pretty much been below average for quite some time. And then, things started to getting better, and then we fell into the COVID rut. The number that we want to look at, rather than just home sales, is the number of new housing per capita. And this number tells us a very, very different story. Going back to good times, before the financial crisis, there were 3.5 houses built for every 1,000 inhabitants, and this number has fallen to 19. So what is that? That is roughly actually it was 43 here. It's been cut in half. Is what we've had numbers here that were even less. These were during what I would call modern day depression. The ratio of house prices to rent. This just gives you a general understanding. Is it better to rent? Is it better to own a house? So any number below 114, it's better to own. Any number above, it's better to rent. So we got pretty close here, 2017, 2018, where it was better to own. We actually got 2011 as well. We have to go back all the way to 1999, when it became really inexpensive to own cities. And so, as a general rule, buy assets. You want to buy assets when interest rates are very high, because this puts downward pressure on price. And so, average rents, and I understand there are some websites that make it sound like rents are going through the roof. I've been a landlord for many years. They have been going up, but not like what some of these websites make them out to be. The place where I go and get real estate information that I think is the most reliable, most realistic, is Kiplinger's. So, basically, the value of a house, the fundamentals, right? Yes, you have your neighbors. Who are they? Who live there next to water? You live next to attractive parks, etc. That is very important. But what drives the price of a house ultimately is how much you could get if you rented this house out to some degree. And you can see rents have, from inflation, U.S. dollar perspective, they have fallen quite a bit since 2016. You can just see here what is the real fall price, about 11.5% real dollars. Even though it might not seem that way, because your wages haven't gone. But for example, rents have been much higher, and going back to 1989, they were probably 1990, 2008. They were a good 22% higher today, real dollars. Next number that we look at is industrial capacity, and 79 is the average. We were at 80.3, so industrial production revved up in 2022. Looking good there. U.S. federal debt, the averages there, they don't really make any sense because they just keep going up. What is interesting is the percentage of change, how it increases every year. So 2022, it was slightly above average, but it was decelerating from before. So these increases, the stimulus packages, 2020, 2021, really boost up the debt, but nothing like post financial crisis. It's 15%, 9, 14, 10, etc. So we've had many years, except for one year, 2017, 2019, where the debt didn't increase. And here we have the U.S. unemployment rate, which is currently at 3.7, which is extremely low. And yes, we've had lower right before COVID pandemic hit. But this makes it very difficult for the lords to find labor at low costs, right? And labor is one of the most expensive inputs into the equation when producing goods and delivering services. So that is the Fed's mandate, is to make sure that labor costs are low. Next economic indicator, car and truck sales. So they have been falling steadily since 2015, from 18 million to 7 to 11 million today. And if you look at this from a population perspective, you were selling 5.6 cars for every 100 people, new ones every year. And today, it's almost half, 3.4. And so, as I mentioned earlier, many reasons for this. Americans are buying fewer American cars, which means that quality of foreign cars is higher, so they will last longer. There are people's wages have come down, right? So people can't afford to buy as many cars. And then, in 2022, interest rates went up. 2023, I bet the number is going to be even lower. And then you probably also have a group of people, they're going, yeah, my car is 5, 6 years old, 7 years old. I'm going to just wait and see what happens with the electrical vehicle market. And it'll be interesting to see how this one plays out. Because we have another variable out there is that the automobile manufacturers, they employ many people, and they're relatively well-paid jobs. Now the electrical vehicle uses many fewer components, much cheaper to put together, and will need many fewer workers. So we'll see how that plays out. A number that I think is very interesting is U.S. federal debt to GDP. The average has been at 0.81 for this past generation. Today it's at 0.125. It's been coming down a little bit since 2020. But it's normally better, maybe not in the short term, but in the long term, for a country to have as little debt as possible, just like it is for a family or an individual. Military spending as a percentage of GDP averages about 0.44. And so, military spending is a huge impetus to the U.S. economy. And it has been lower than average for the past, I would say, 6 years. And so we'll see how, with the war in Ukraine, it depends on how the government calculates the spending on the weapons that are being sent to the Ukraine to be a part of military spending. So the military spending, that number always goes up. Of course, there are some exceptions, but what we want to capture here is the basically how does that change from year to year? Right? So we had a year here in 2020 where military spending down a lot in 2017. So basically, the average percentage change is no change, right? It just goes up with inflation. The last 2 years have been Democratic. The Dow Jones Industrial Average to GDP, the average is 0.92. So this indicator tells us that the stock market is overvalued, not as much as it was at the end of 2021. Excuse me. The Big Mac, the Gilgard Big Mac Index across the world, price fell sharply in 2022. And it has been a falling trajectory. So why this is, not sure. People are getting more health conscious, or people just can't afford to eat out. Time will tell. And the last number is the Gilgard Stock Market Barometer. This is just an aggregation of the number of ups to downs stocks on a daily basis. And the idea is, as long as people don't get too exuberant, there's a good chance the prices will go up following years. So, for example, 2021, market exuberance got a little frothy. The average is 167. Today, or the end of 2022, we're at 5. So this concludes the third and the final tutorial on asset classes and economic indicators. Hope you found this tutorial helpful. If you have questions, if you have any comments, please send them to me. Thank you.